So good morning and welcome to this My Money Matters hosted webinar. It's time to avoid retirement regret. My name is Ian Anderson. I am one of the financial education coaches at My Money Matters, and I've worked in financial services for over 40 years. And prior to joining My Money Matters, I worked for Prudential for 7 years, Prudential being one of the main providers of ABCs in the local government pension scheme. During that time, I've assisted thousands of members like yourselves in retirement early and with more money. Today, I'm going to explain why it's really important to plan effectively for your retirement as you approach that key chapter of your life and how to make the most of the opportunities that you have. Please note this webinar is for educational purposes only. It doesn't constitute financial advice in any way. The information that I run through is based on our current understanding of taxation, legislation, and scheme rules. Levels, bases, relief from taxation are subject to change and also treated on an individual basis. In respect of the investment funds, remember that they can go down as well as up, and past performance of those funds shouldn't be seen as an indicator of how they may perform in the future. And this webinar is recorded for training and compliance purposes, which also means that if there's anything you want to revisit, you'll be able to download a recording of the webinar after it ends. As we go through this morning's session, if you want to ask any questions, you can do so by making use of the Q&A feature that you'll see at the top right of your screen. Please try and keep any questions that you have in relation to the content that we go through, and also try to avoid sharing any personal information. And what I'll do at the end of the webinar is run through any questions that you may have. Now, as well as doing retirement webinars, we also cover other topics such as debt and money management, saving investments, estate planning, and also insurance and protection. So if there's other things which maybe you want to understand a little bit more in detail, then feel free to join us on any of those other webinars. So what are we going to be looking at today? Well, mainly the thing about today is, do you feel that you've planned effectively for your retirement, something which you may have worked 30, 40 years towards, not necessarily all in local government, but have you done enough to make sure that when you do retire, you're going to lead as a fulfilling retirement as you possibly can? Because once you reach a certain age and that clock starts counting down to retirement, you're in a key decade. It's very easy to get caught up in the here and now and for general hustle and bustle of life, but it's very important to pay focus to what is lying ahead. So the key thing in terms of making sure that you have enough money for your retirement is to be proactive. And it's also, as I said, to ensure that you make the most impact you possibly can in the time you have before your retirement. And it's very easy to think, well, maybe you've left it too late or it's not really going to make a difference. But hopefully at the end of the webinar, you have the knowledge and also the confidence to plan for your retirement and make that difference. So one of the key questions to ask yourself is, when do you want to retire? Well, most people, when I ask them that question, might say 60 or 61, and then counter that immediately by saying, well, I don't really think that's viable or achievable. So how would you actually feel that if you didn't plan effectively, you end up working longer than what you originally wanted to? And maybe with hindsight, think, well, if I had been more proactive, maybe that desired retirement age was in fact achievable all along. Because effectively there are two certainties in life. One is taxes. We always told death and taxes are the two things. Now, unfortunately, I can't do anything about the death part, but I can tell you how to be more tax efficient. Because working longer effectively is going to mean that your retirement is shorter. Now, according to the Office of National Statistics, the average life expectancy for men is 83.5 years. So even if you retire maybe a little bit before your normal pension age, or maybe at 65, you've got 18.5 years, hopefully longer, to ensure that you have sufficient income to cover that period of time. For the ladies amongst you, a little bit better news, but you have 21 years on average if you retire at 65. So the average life expectancy for women, 86. And the other thing also to bear in mind that if you do retire at a later age, we have the time or health to do the things that you want to do. So that's why it's really important to ensure that you plan effectively, because unfortunately, none of us live forever. So that leads on to another question, not only in terms of when you want to retire, but what do you actually want to do when that time comes? Now, we might all have similar plans, might just be spending more time with grandchildren, going out on more nice meals out, or maybe ticking all those places off your wish list in your retirement. But as I say, all of those things effectively cost money. So whilst you might have more time to do some of the things you might struggle to find the time at the moment, you're going to need to ensure that you can afford to do those things. And ultimately, that is going to be based on how much pension you've got. Because if you want to retire early, your pension is going to be reduced from what it would be at your normal pension age. You can't take your state pension any earlier than when it's due. So that's why, again, it's important to factor those things in. Which again comes back to the same question, that if you don't plan effectively, you may not have the retirement lifestyle that you envisage. Because as good as a local government pension scheme is, and is a really good scheme, those of you who've long service in the scheme will testify to that, there will always be scope to improve those benefits further. And it's very easy to, as I say, just get caught up in the here and now, and then suddenly realise that your retirement is looming at large. The years seem to tick by a little bit faster as you get older, and nobody else is going to do this for you at the end of the day. So only you can really make that difference. They may sort of think, well, is it too late? Can I make a difference? Well, it's never too late to enhance your retirement income. And one of the things that you have in terms of enhancing that is the unique employee benefit that you have at your disposal, which is the shared cost AVC. So what the shared cost AVC is doing is building up a pot of money that you can take back tax-free under certain conditions. It's worth noting that the local government pension scheme is the only public sector pension scheme that not only allows you to save in this way, but gives you the option of taking the whole amount back as a tax-free cash lump sum. So members of the teachers' pension scheme, NHS, for example, they don't have that option. And there are a couple of caveats to taking the AVC tax-free. One is taking it at the same time as you take your local government pension, whether that's at normal pension age or earlier. And there's also a limit to how much tax-free cash you can take. Now, if you don't know what that limit is, don't necessarily worry too much about it. It's something which we can always help you determine. Another key feature of the shared cost AVC, giving you that peace of mind, is its flexibility. So you have that peace of mind that if your financial circumstances change, you can adjust the contributions that you pay into it on a monthly basis. So if your car suddenly needs repairing, you can reduce your contributions, sort your car out, and then pick them up the following month. Really that straightforward. Now, whilst all local government members are able to pay into additional voluntary contributions as a means of giving themselves more income at retirement, not every local government employer offers additional voluntary contributions on a shared cost basis. So the fact that your employer does is fantastic news for you, because it means not only do you get tax relief on those contributions, as you would with a standard AVC, but also on national insurance contributions as well. Effectively, a double tax break. It doesn't really get much better than that. Let's look at an example just to demonstrate the potential savings that this employee benefit offers you. So if you wanted to pay £100 a month into a shared cost AVC and you are an intermediate taxpayer in Scotland paying 20% tax, what will that actually cost you from your take-home pay? Well, it actually cost you just over £71 from your take-home pay. So that's saving of nearly £29 a month. It's purely from the tax and national insurance savings that you make. Similarly, if you pay £250 in as a intermediate taxpayer, 20%, that would cost you just under £179 from your take-home pay. So you can see it's a really tax efficient way. So the ability to save in an extremely tax efficient way, and also have the option of taking that back tax-free when you retire, which might sound too good to be true. But just rest assured, this is approved by not only HMRC, but it also forms part of your local government pension regulations. So a great opportunity, but as in most things and most opportunities, to take advantage of them, you need to act upon them. So if you're not currently making any additional form of saving for your retirement and you feel that your retirement income is maybe not going to be able to allow you to do the things that you want to do, the key thing is to be proactive and make that difference and take action. Because ultimately, when you do get to retirement, you'll find that two types of pensioners. There are going to be those who planned ahead effectively and lead the lifestyle that they envisaged. And there's going to be those who maybe didn't plan ahead or didn't take action and maybe look back in some regret that they had that opportunity but did not act upon it. Because as I say, nobody else is going to make this happen other than yourselves. So remember, that £250 costing you just over 178, effectively giving you a return of nearly 40%. And that's 40% every contribution you make between now and when you retire. So you can see that that effectively compares very favourably to other forms of savings, such as an ISA or Building Society account. Yes, you could access either of those options anytime you like. With the ABC, the earliest you would currently be able to do so would be from the age of 55. However, this is not putting money aside for next year's holiday. This is putting money aside for hopefully the longest and most enjoyable holiday of your life, your retirement. So if your retirement is 10 years away, that is still time to make a significant difference. So if you effectively pay that 250 over 10 years, over that time, that will have cost you from your take-home pay just under £21,500. But assuming a net growth of 3% on that investment over that time, could realise an ABC pot of nearly £35,000, and obviously potentially all tax-free. So imagine what nearly £35,000 tax-free cash lump sum can make a difference to your retirement. And that, over that time, would have only cost you just under £179. But as I say, the key thing is to be proactive. So don't effectively let time lag by, because every opportunity that you're missing is a payday that is not only losing you that opportunity to save on tax and national insurance, but also to build up that additional pot of money. So if you are 10 years away from retirement, you've got 120 opportunities to make that difference. Even if you're a year or less away from doing so, you can still make a difference. So are you effectively in a position to make a difference to your retirement today? Now, in order to apply, it is very straightforward indeed. All you need to do is go to the My Money Matters website and complete the application form there. So enter your personal details and decide from your chosen investment provider where you want your money invested. Your employer will then check that application and verify that everything's okay. You can also set up an online account with the provider, and participation in the scheme itself will take effect from the next available payroll. Now, if you're already making share cost AVCs, or once you establish your AVC, it's also very easy to amend that. Just log into the account, head to the My Share Cost AVC page, and simply enter the new amount. It really is that straightforward, so you don't have to contact your payroll or HR. And again, that will take effect from the next available payroll. Now, I'll come on to any questions you may have shortly. So if you do have any final questions for me, now's your last call to ask away. Appreciate sometimes people might just want to explore their own personal circumstances, dot the i's and cross the t's to see how they can take advantage of this opportunity. And one of the ways which we can help you do that is by offering you a one-to-one meeting via Microsoft Teams. So what we can do at that meeting, based on your service within the scheme, calculate the maximum AVC amount you could potentially take back as a tax-free lump sum at retirement on top of your local government pension benefits. We can also have a look at the maximum amount that you can pay in any 1 month to really help you get the most out of those savings and take advantage of this opportunity. Now, we can't give you any financial or investment advice. We can talk you through those investment options, hopefully put you in an informed decision and help you understand those a little bit clearer, but ultimately we can't recommend or advise. Now, all you need for that meeting is your latest local government pension scheme statement, or if you want to retire before that time, a projection to your desired retirement age. If you're already making ABC contributions, have an understanding of how much is in that pot at the moment, and also please have your most recent payslip. So I'm just going to have a look and see if any questions have come through. Can't see if there are any up, that's fine. If there is anything, ultimately, you can always get back in touch with us and we will endeavour to answer those for you. But hopefully, what you find now is on top of a really good local government pension scheme, you have an opportunity to make a difference to your retirement and maybe control the age in which you retire. So if you want to retire early, it may be that the shared cost ABC allows you to do that and soften the blow of that reduction in your pension. But ultimately, what it's going to do is going to control the retirement lifestyle you will have, because two things are really going to ultimately determine your retirement. One is your health, which we can't always predict or control. And the other, quite simply, is how much money you've got. And this is an extremely tax efficient way of making sure you have sufficient money. If you need any further support after date, you can email us at support@mymoneymatters.co.uk. There is also a live chat facility on the website as well. So if you get stuck maybe on the application form, use that live chat facility during working hours. Similarly, during working hours, you can pick up the phone and dial the number shown and speak to our friendly customer services team. The Knowledge Hub on the website is also quite useful. So there is a projection calculator on there. So effectively, you put your salary, how much you're looking to pay in, and when you're looking to retire, and it will do two things for you. It will tell you the cost to you from your take-home pay for that contribution, and also give you a projection of what you could potentially build up between now and retirement. Very easy to use, but also very powerful in seeing the potential scope of this. If you have any queries about the ABC, so pretty much any question anybody's ever asked, what happens to this, what about that? If you go onto the website, you'll see a link to FAQs, which stands for frequently asked questions. And if you click on that link, it will download a PDF document, which will be bespoke to your individual employer. And that will answer any question that you have. So just to summarize, retirement, a key chapter of your life. As I say, one, you've worked a long time to reach. All those days, 9 to 5, maybe longer, have good days and have bad days. But when you reach that time, you want to make all that work worthwhile. And as I said, this is an opportunity to ensure that your retirement is as fulfilling as it can possibly be. But as in most things in life, the best opportunities only fulfill themselves to their fullest extent if you take advantage of them. Thanks very much for listening to me this afternoon. I hope you have the rest of a pleasant Tuesday.